Welcome to the Money Over 50 podcast, brought to you by Dallas Davison and Michael Hogue from Money Over 50 Financial Advisors. This information is general in nature and does not take into account your objectives, financial situation, or needs. Therefore, you should consider whether the information is appropriate for you and your personal circumstances. If you require personal advice, please contact Money Over 50 Financial Advisors. Here are your hosts, Dallas Davison and Michael Hogue.
Welcome to Money Over 50. Today's topic, the difference between a good accountant and a good financial advisor. Michael.
Dallas, I've heard you say on this podcast before, if there's any accountants out there listening, just know that we know what the real figure is. We're just rounding it up to $40,000. Yeah. We're rounding it down to $40,000. Yeah. Well, there is at least one accountant listening. It's a friend of mine, Kate Smith. She's in my boxing group on a Friday morning. Yep. And we're having coffee just the other day, and Kate says to me after the boxing session, "I've got a bit of an issue with you."
Because you're always canning accountant.
You said something the other day on the podcast. This is Kate saying this to me. That was she didn't use the words hurtful or anything like that. It was really negative towards accountants. And I was racking my brain. I couldn't
even remember.
Thank God she couldn't think of it either. But I think I said the over setting up of self-managed super funds by accountants is pure evil. Yeah. Now I retract that statement. Yeah, it was a little bit of
hyperbole there.
Hyperbole. Yeah. However, there are some bad or unscrupulous accountants, just as there are many bad or unscrupulous financial advisors.
Yes.
Kate's not one of them.
No.
She throws a mean punch too. So I've actually been her boxing partner before, so she can throw a good straight left and a good right hook. So I know you're listening, Kate. So g'day.
So now just to I guess this is the point of what you're getting at there is that there are many good accountants, and so what we were talking about here today is obviously there's really nothing. I mean, there is things to talk about with shoddy accountants, and as there is, bad financial advisors. We've talked about it before. Like any industry, there are both people who are not doing the right thing from an integrity point of view, but then there are also just incapable people who just aren't good at what they do. And so what we're talking about today is the difference between a good accountant. There are many good accountants out there, and you may well, as a listener, you may well have a good accountant. So what we sort of want to touch on a bit here is the difference between a good accountant and a good financial advisor, which we will put ourselves in that category. And I think the further point to that is how they all work together. And that's how we think of it, is that team approach, is that it's not our job to replace an accountant. That's not what we do. The accountant has their place, we have our place, and it's about us all working in together. And so you want a good accountant just like you want a good financial advisor.
So, there is some confusion, and I can understand that confusion because some people think that we do the same thing as an accountant. They said, do you do tax returns? And we said, no, we don't. Yep. So I thought we'd break it down in some talking points. So for me, one of the main differences is that a good accountant is tax focused for that particular financial year, and they should really be that way as well. So they don't necessarily appreciate and nor perhaps they should. It's not their place. They don't appreciate a longer term financial plan may not be about obtaining the best tax outcome for that year. Now, that may confuse listeners as well. We're always talking about picking up tax deductions, and that's true. However, I'll just give you an example. So years ago, I had some clients, and they only had the smallest amount left on their home loan. And we were looking at actually putting money into superannuation for that year and claiming it as a tax deduction. But in discussing it with them, they said, look, we just want to tick this box of getting this thing paid off this financial year. And they're on track to do that. So I actually penned a little email to their accountant and I said, before you complete their tax return, can you just take this into consideration? They came back to me after meeting with their accountant and they said, the accountants actually recommended that we, actually instead of paying off our home loan a bit more, actually draw back on the home loan and put that money into superannuation. So I just reached out to him, and look, it wasn't that he said that at all. Yeah. It's just that when they went in there, they also said that they want to maximise their tax deduction.
They don't want to pay any tax. Yeah.
So he was doing exactly the right thing.
Yeah.
And he was looking at that particular financial year.
Yeah.
And even though I said that it was a priority to pay their home loan off, they communicated that a very different way when they actually went in there, because they said that they want to. Yeah. So between the two of us, we actually worked it out that they probably wouldn't be doing that for this particular year, and we got back in touch with them. But I guess that highlights one of the small differences between for me. A good accountant's role is looking at that particular financial year and saying, okay, what can we do to maximise your tax deductions for this particular financial year?
Yeah, I think that's a great point, and I do think to push back a bit on what you said, a good accountant really should be thinking at least the next couple of years in advance. So they do want to. They're focused on. They're generally, often when you go to see your accountant. If you've got a business or something where you have to do proactive tax planning, you'll normally go and see your accountant in sort of May, but even that tends to be backwards looking, where they're going, okay, well, for the financial year to date, this is what's happened and this is what we need to just tidy up before the end of the financial year. It's all it's still backwards looking, or for the average person who doesn't go and see their accountant until the financial year's already passed, and they kind of go, this is what did happen throughout the financial year. But a good accountant still should be at least thinking about the next few years. And what I mean by that is, I've got the best example I can think of now is I've got clients who have cattle properties, for example, and there's a lot of things that you can do there where you can push sales into future years. And where I've seen accountants who aren't as good will just go, as you said, no one comes in and voluntarily says, I just want to pay, I'm happy to pay more tax this year. Everyone wants to pay less tax. And so the client will come in and say, I don't want to pay any tax. And so the accountant will do forced sales into the next financial year, and they'll, pull in deductions in this year and do all these sorts of things so that the client doesn't have a tax bill. What they haven't explained, though, is that we're just kicking the can down the road, and next year you're going to have a bigger problem, and the year after that you're going to have a bigger problem. So a good accountant is always focused on that particular financial year. They should still be thinking about the near-term future in those future years as well. I think, to me, the big one, as you just touched on there, is that they're normally not privy to, or it's not their remit to really to be thinking about that longer term financial plan. And that's I think where I've had great relationships with accountants where you're able to sort of start from that point of, this is what we're trying to achieve over the next 10 years. Yeah. And a good accountant is fantastic at working with that, and they sort of often appreciate having that. Like you say, it's not their role to get in with their clients and talk about what are your retirement, plans, and when do you. They just don't have the capacity, and it's not really their skill set to have those sorts of conversations and to know that. But if I can go to an accountant and say, look, this is what we're trying to achieve over the next 5-10 years. If there's a property sale within there, or some cases a business sale or whatever, and this is the timeline of events that we're looking at. A good accountant is then fantastic at working proactively around that, but they have to. Often you have to sort of have a bit of a framework of what you want to achieve, and that's, I think, often the issue is that even a good accountant, for your average client that's going in to see them, they don't necessarily know what it is they're looking to achieve over the long term. So if you don't know what you're trying to achieve over the long term, what's the old saying? If you don't care where you're going, it doesn't sort of matter how you get there. And that's sort of the approach, I think, is a lot of people don't know where they're trying to get to and what they're trying to achieve, and then because of that, their accountant is just going to focus on that one particular financial year. And so it's not the accountant's fault when they're not doing that proactive planning. It's just they need that framework to work towards.
And it's our role to actually communicate that with our clients' accountants and say, okay, here's the big picture for us over the next 10 years, the next 30 years, or where we need to be is here, and that helps frame the advice from the tax specialist point of view.
Yep.
And that's another point there. So we are very tax focused financial advisors. So there are some financial advisors out there that don't look at tax at all. Yep. We actually, this is digressing, we think they're getting paid when they shouldn't be.
Well, we've done a podcast about this, about the what was it? I can't remember the title. It was basically dodgy financial advisors, partial financial advisors, and good financial advisors. And the point made is there's a lot of partial financial advisors where they'll give advice about a lump sum of money or what you should do in a vacuum, as though you're not operating within the Australian tax system. So it's sort of bizarre. It's like they're sort of giving you advice about here's what you should do with your money, as though tax doesn't exist. You go, well, you can pretend tax doesn't exist, but the ATO is going to come after you for their pound. So you might as well take that into account, and you should be taking that into account.
Absolutely. So look, we're very tax focused, and we know a lot about specific elements of the tax system, but such as superannuation contributions tax and the legislation around that, and how to claim a contribution at 39% tax deduction and only pay 15% tax going in. What we see quite a lot, and this is probably more pertinent or relevant for business people, those business clients of ours, is that there are so many specific areas of taxation law that accountants are experts at. Yeah. We have an understanding of a lot of that, but we are not an expert at some of those specific, business tax planning elements as well. So,
and that's I think the key too is we're talking about a good accountant and a good financial advisor as though there's one thing for everyone, and that's I think the key for me is, like we've talked about, we just specialise in retirement planning. That's what I'm the best financial planner in Australia at retirement planning. Now, if a 30-year-old comes to see me, we were just having a discussion, just then having a coffee with one of the other people that shares our office, who is a young woman who's about to buy her first home, and I started talking to her about the First Home Super Save scheme, and then I sort of tailed off and went, I don't know exactly how it works. And I couldn't be bothered looking back into it, because that's not something that my 55-year-old clients need. So I know there's something there, but you need to go and deal with it. So even though I'm the best retirement financial planner in Australia, and I'm waiting for you to roll your eyes, and you haven't done that yet, so, but I'm the right financial planner for a 55-year-old couple. I'm not the right financial planner for a 30-year-old couple. And so I think the same thing applies with accountants, and that's where it's easy to... people tend to pick their accountant and then just sort of go along, and they sort of roll along until such time as they feel like the accountant has stuffed something up, or they've charged too much. Whereas what you really should be doing is thinking, okay, based on my situation and my needs and what's specific to me, who is going to be a good accountant for me? Like you said, if you're a business owner, if you're a small business owner here in Townsville, the type of accountant that you probably need is going to be very different to, a nurse and a school teacher, for example. Or if you own, $30 million worth of cattle properties, your accountant's going to be very different to the local, just the local bloke in Charters Towers. It's not saying that each of these accountants aren't good accountants. It's that there are niche areas that they need to be really across and really an expert in for some people, and it's about finding the right one for you and what you need from them. So, I think that's a good point, is that, that applies to us as well. And I think the key for us is often knowing the limits of your knowledge. So we know enough about tax to go, okay, I know these rules. Okay, now we're getting into some territory that I'm not sure exactly how that works, or how that might be relevant for this client. Let's go and get your accountant involved in they can give us the exact details of how this will work. And that's I think a talking point here that you've raised, is that a good financial advisor, which is us, we should be utilising a good accountant where necessary for tax expertise. It doesn't help anyone if we pretend that we know everything about tax and the tax system and all these little arcane bits and pieces, because we just don't. You can't be across all those different things. No. So we need to be able to get a good accountant involved where necessary to get that expertise.
Yeah, absolutely, because we are more broad in terms of we tax is a huge part of the overall financial strategies and plan that we use. Yeah. However, also is getting to where the client needs to be in 10 years and then retiring and never running out of money.
The psychology
and,
of how much
working
money
their money hard enough and how much. So accountants aren't responsible for those areas. No. They're responsible for the tax side of things. Yep. So they are experts in that niche.
Yes.
And a good financial advisor should be utilising a good accountant in terms of that tax expertise where necessary.
Yeah. And that's, I think, again, where we've had relationships and where things have worked really well with good accountants is that they're, again, aware of the edge of their expertise as well. Is that I've often had accountants that have sent a client across and said, hey, I've talked to them about all these sorts of things, but they're asking questions about, retirement, how much should they be saving and where are they on track to be and how much do you think they'll need and all those sorts of things. And a good accountant is very quick to go, hey, that's outside of my area. You need to go and talk to a good financial planner about that sort of thing. So I think that's the key to that is everyone knowing their place. And that's, again, a good accountant knows that in the same way that a good financial planner knows how much their knowledge is. Where we've seen it get dangerous from both perspectives is that if you've got a financial advisor who thinks they know everything and they're trying to tell you, all the rules around how much laundry you can claim on your, through your small business, all these sorts of things, they're probably going outside of their realm there, and you should really be listening to your accountant, not them. In the same way, if you go to your accountant and he's telling you you should be investing your money in these assets, or this is how much you should be saving every week, and all these sorts of things, it's either incomplete advice, in as much as the accountant may only be telling you what you should be doing in order to minimise tax, or they might be getting outside of their area of expertise without realising it and giving you advice about something that they probably don't really know about. So I think that's the difference between a good accountant and a good financial advisor is just that they have different areas of expertise. The commonality is that both a good accountant and a good financial advisor, they know enough to be able to stay in their lane. They're not going to give you advice about something they're not really an expert in, and they can see the value in that team approach and making sure that everyone's working on the same sort of script.
Thanks for listening.
Thank you for listening to the Money Over 50 podcast with Money Over 50 financial advisors. We look forward to catching up again soon.